us.
Good morning.
Well, we have a big event coming up, the Fed event. Do you worry that this can mean a lot of volatility? How are you looking at the post September 17 period at all?
I think, Lata, first thing is, I think the volatility that we could have expected with the rate increase or even a stall on the rates possibly has already been through thanks to the Chinese. I think that's the period is over. Okay. By and large, the market is now willing to, if we can take the Chinese yuan depreciation and all the volatility, I think 0.25% up and down in the Fed rate, I think can be easily absorbed in the system. And let's look at Indian market. I think by and large, we have become in a market which is insular, that the foreign investment is kind of tapered off. It's the domestic flows driving the market. So, and domestic flows are really driven by desperation for returns as the year ends because they're sitting on losses and we need to find some way to make our money, and which is reflected in the volatility. You know, the single news in a stock takes it up 20%. Now that shows you that the volume of liquidity is surging in domestic market, trying to find a way to make money. So I think my view is that even if the rate increase goes through, nothing much is going to happen in the Indian market because the worst possibly is being behind us.
That's positive. Actually, all the fund managers we speak to are exuding hope that, or exuding enthusiasm. For the first time in several years, they have noticed that their kitty is rising by about 9,000 crores every month. So retail money is there. What is the sense you are getting? You also have your finger on the pulse of retail money. Do you think that continues, that has seen the worst period of volatility and remained loyal to the markets, retain their recent loyalty at least? So you think we can we can relax on that issue, that we are going to see domestic participation continue?
No, Lata, what we are seeing now is in the first bout of the last recovery, but what we saw was unbridled enthusiasm to go into the market. This time, the retail investor is far more circumspect. It is looking at even debt options and saying, listen, why am I moving in? Should I keep it in debt? And so on. So, and if this rally gets sold into for whatever reason, and we believe that it will get sold into, and we can go into that later, I think then the retail investor is not going to come back easily. So this time it is not exuberant. This time it is averaging the losses and more circumspect investment. Okay, I think the bottom has reached. Let's try one more time. I think if this attempt fails as a en bloc retail investors, I think we'll have trouble in the first quarter because this liquidity is going to move to debt and not equity. So it's a lot rides on the fact that this rally has to sustain itself for a couple of months and give some returns to customers. If it does not, if it fizzles out, I think then the problem starts. There's no enthusiasm. It's it's like saying, "Chalo, dal dete hain." Those kind of stuff happening there.
That's about the rally, but what about the bottom for this market, Ajay? By the way, hi, morning. Do you think that we formed sort of a double bottom at that 7,600 level, or do you think that there could be one more leg of a downside that this market has to brave?
See, whatever we are seeing from the market at this point of time on the pure consumer demand, I think we have one more leg of the downswing still left to go in this market. And I say that with, great amount of discomfort that whatever we see in the paper, the growth rate, etc., is not translating to two fundamental factors, consumer buying and employment. I think those two places we are seeing major weaknesses. I have not traveled to the rural areas particularly to give you a comment on that, but I guess the distress is far more visible there than in the urban areas. But clearly, there is a very, very great sign of a great retail slowdown emerging in the market. And in spite of the onset of festive season, there is no festive cheer. And I think that's the worrying part, that if that kind of keeps going on, then we have trouble in our hands very soon. And that's why I say the market lows may be tested, because what's happening on the ground, if it gets translated into the corporate results and gets translated onto the expectation of the market in the next quarters or 2-3 quarters, you could see a fair bottom coming lower than 7,500.
But we haven't seen that get translated yet into some of these retail-dominated pockets, like say consumer, FMCG for example. Every time the market recovers, you see all of these FMCG stocks come back into action, whether it's Britannia, Godrej Consumers, Bata. What do you do with this pocket now?
See, Sonia, you're right, absolutely, and that is what I said. This market is driven by liquidity seeking returns. So the moment there is a correction, the moment there is a slight uptake, they go back to the favorite stories. Nothing wrong in the favorite stories of the Marutis, the Godreges, and the FMCG stocks. Nothing wrong in the story. The problem is that the fundamental of these companies are not changing or possibly going worse. So yes, liquidity can chase the stocks forever and ever, saying, it was 30% down from the top. That's not changing the fundamental dynamics. And that's when I say that when the interplay of fundamental and valuation starts to happen maybe around November, when the results will be more apparent for this quarter, I think that's the time when you could possibly have a big market shakedown, saying expectations are still not working through. And the biggest one is going to be CapEx. I'm telling you, next 3 quarters, we will see such a slowdown in CapEx companies is going to be it'll be brutal in fact. What has gone through 1 year is nothing. The new pipeline is zero. So whatever we are seeing is old. Look at the coal companies, auction happened. Do you know anything happening to any of the auctions? Nothing. Zilch, zero. You look at the UMPPs, the ultra mega power plant, anything happened? Zilch, zero. So, these are the orders which take 3 years to come to get into a supply mode. So if these orders are not coming, look at what's going to happen in 2016 and 2017. So visibility of CapEx-oriented companies is going down, I think, by the day, literally.
No, point taken. Actually, I wanted to digress and tell you a couple of key takeaways from my visit to Kolkata, where I had to meet a bunch of corporates. Exactly what Ajay is speaking about, the coal auctions. Severe worries about power, the inability to raise user charges. Bengal has a tradition of not even paying for water. I mean, there's no water tax. They've got used to paying for power over it, and the power price is not as bad as Delhi, though it's much cheaper than Bombay. But there is resistance to, if you don't raise the tariffs, the power companies are not able to buy coal, and therefore the coal auctions get stymied. So there is a lot of, problem with that kind of, the capex-related companies that logjam with power companies. The second takeaway, exactly as Ajay was saying, this worry, met a lot of traders, stockists, dealers, saying things are not moving at all. So there's serious worry about sales. But the pocket of brightness was very coincidentally dovetailed by yesterday's DIPP World Bank report of states that things are happening in West Bengal. On camera, all the CEOs would tell us that, oh, this government is moving and things like that. But off cam, there was a widespread acceptance that things have changed for the better. Apparently, they used to fill 97 forms to start a business. Now they fill 7 forms. Okay. So, there was a lot of kind words for TMC. That, the first, when they came in, they behaved like agitationists and protesters. It was a government party which behaved like an opposition party. But that's not the story that they want to say about the last 2-3 years of the TMC rule. A lot of kind words about the government, something they've gotten unused to. But, industry thinks that this government is working more than the previous and more than its own early promise. Okay, Ajay, you told us about, yes, the overall slowdown definitely in capex and consumption. So where do you look for returns? Go back to pharma? I mean, there's definitely looks like a rupee depreciation on the cards with a Fed hike and a RBI cut, like we were discussing earlier today. So is there a rupee play, or is that already played out?
I think, Lata, let me answer in 2 places. One is, where do you actually park your money? And I think, is it a familiar place to go back to pharma, which I think is to me, it's a, dead giveaway that we've been saying that for years, so nothing new about it. I think now what's happening is that 2 things are happening. One is a trick to find out key companies which have got great amount of traction in the market. You saw, if you look at yesterday's market action, and you see the mid-cap story actually gaining traction. Fundamentally strong, by and large, non-leveraged stories with a great potential going forward. And I can give you examples, and roughly speaking, we're giving examples, so I'm not saying we hold position, maybe most of them perhaps. If you look at Just Dial, if you look at Venky's, etc., when the news came out that McDonald's is going to do all full-day breakfast, the first thing which came out was a shortage of eggs in the global market. Which is the company is going to gain the most? It's companies like Venky Hatcheries. So, you need to pick out these nuggets from the market and keep building on them rather than trying to follow a theme and follow the market that somebody bought a share, so let's go buy the share. I think that's the most ridiculous strategy I ever heard in this country. That because a marquee has gone the name, so you also go buy and put your money there.
Yeah, fair point, Ajay. Actually, fundamentally strong, cash flow driven, low leverage companies. There weren't so many actually. Our CNBC research team did a lot of research on this and came up with their A list, a much appreciated product actually. But yes, those are, I guess, the pockets where you can still make some money. We leave it at that. Ajay Srivastava, pleasure speaking.